Good afternoon, everyone. I am Sensei Kevlar. Welcome to another dojo. Today we're going to be talking about the critical role of diversification in your portfolio. Diversification is the act of diversifying. Diversifying means doing it all. I have up here, for your viewing pleasure, a chart which represents the three types of growth that you can experience with regards to your portfolio. And I want to show you how diversification plays into these different opportunities. So the first type of growth that you could obviously experience is the threshold growth, in which you just, this is what you have. This is where you are today. This is where you should be today. Threshold growth. The reason that you should have threshold growth is because you're not trading. You're maintaining your value, and you're ensuring that what you're doing is you're keeping your opportunities open to you and not losing value in terms of the total amount of assets that you have. This is linear growth. Linear growth is what everybody thinks they want. This is what your job gives you. Linear growth. It just gives you the same amount of dollars over time. Over and over and over and over again. This is fine if you want to be rich, sometime way out here. If you want to really make it in this world, you need to be looking for exponential growth. Exponential growth is the type of growth that compounds upon itself. Diversification is a strategy in order to achieve exponential growth. And the way that diversification works in order to achieve exponential growth is through a concept called compound interest. You've probably heard of compound interest before. I'm going to take you to my favorite site, Compound Daily. I'm going to show you something here. Let's say that I had a portfolio of $20,000. And let's say that I was able to achieve, let's just make it 0.5% a day. And let's say that I was able to do that, and I was able to reinvest that growth into my portfolio. Rather than taking that money out and spending it like you do with your job when you get your paycheck, what I do with my paycheck is I spend it on my rent. And then my amount goes down. And then my job gives me more, and then I go back to zero. And then my job gives me more, and then I go back to zero. Well, that's not a way to actually make it in this world. What you want to do is you want to find a way to diversify such that, some portion of your opportunity does have to go to your rent, to paying your bills. But some portion of your opportunity needs to go into this track right here, your exponential growth. When you do that, when you make it so that you can compound your interest, when you can compound your opportunities using your previously paying out opportunities, let's include weekends here, something very interesting happens. Let's say that we were only to start with a portfolio of $20,000. Let's say that we were able to achieve a return of 0.5% a day on that $20,000. And every single day what we're going to do is we're going to reinvest that interest, that worth, that value into our portfolio. In the first day, we're not making a lot of money. We're making $100, right? Maybe we lower this. Let's bring this down. Let's bring this down half as much. We'll do 0.25. In the beginning, we're not making barely anything. We're making $50 a day. This is not going to be enough in the beginning, especially with $20,000. Or maybe this is a lot more than you're already making. Who knows? Here's the point. If you take this money out that you just earned and you don't put it back into the principal, you're not going to give yourself the potential to earn more later. Because these opportunities are going to compound upon themselves as you grow them. Through diversification, you can set up a strategy that will continually pay into itself in terms of your total net worth. And that's what I'm going to show you today. Because what happens is when you start diversifying that and compounding that net worth in terms of exponential growth, You don't just multiply it a single time, okay? At the end of a year, on 0.25% of interest, we ended up with 50,000. I'm sorry, let's make sure we got that right. Yeah, $50,000, okay? So in this first year, we went from 20,000 to 50,000. Let's do it again. In the second year, we went from 50,000. We did exactly the same thing the second year, except somehow we ended up with 125,000. Okay, we went from 20,000 to 50,000, then from 50,000 to 125,000. If we go from 125,000 and we do it again, the damn thing breaks. We got to go all the way back down to 100,000 to see what we would have made. Maybe we take out 25,000 and pay off our mortgage. And look at what happens. Okay? Suddenly we're at $248,000. Well, what happened here? Using exponential growth, we took $20,000 and we turned it into $248,000 over the course of 3 years. Now, I don't know about you, but I'd be pretty happy with that type of return. If I just took $20,000 and I turned that into $250,000, that's a lot of money as far as I'm concerned. Here's the point. Diversification enables you to realize these opportunities by finding opportunities that average out to a daily interest rate. This is what you're really targeting. You're really trying to find opportunities that are going to pay out continuously over time. Okay, so if you're looking at one opportunity and you're looking at something like Bitcoin, let's just pull up a chart that tells us what the current price of Bitcoin is at the moment. Okay, this is a chart that tells us what the current price of Bitcoin is at the moment. Let's just do a quick refresh on it to make sure that we're seeing up-to-date data, because we can see that we're probably somewhere in the $7,000 range. Somewhere between 7,000 and 8,000 right now. I think we just took a dive back down to 7,000 from a high of 7,500. Whatever. The point that I'm making here is we can see exponential growth here. Come back to the chart that I just showed you. There's that curve. What this curve is when you start taking your opportunities and compounding them upon each other. This is the growth that it looks like right here. It starts off slow, and then it builds, and then it accelerates. And the more that it accelerates, the more it continues to accelerate. And yes, you're going to get pullbacks, of course. But long term, your opportunities will continue to compound. Okay? Now, if you had simply bought and hold Bitcoin, you could have had exponential growth over this time frame, certainly. But if you look at these exponential growth curves, you might notice something, which is that they remain flat for long periods of time. Is that really the case? Are we really doing no growth on an exponential curve? It's kind of hard to see on a scale like this. So what we really want to do is we want to move this to a logarithmic scale. You see, what a logarithmic scale does is right now we're on a linear scale. What's a linear scale? This red line is linear scale. Linear scales increase monotonically. For every increment up, they increase by $1,000 in this scale. $1,000, $2,000, $3,000, all the way up to $10,000 up here, $9,000 up here. If we go and we switch this to a logarithmic scale, what we will be doing is we'll be changing the rate of progression. Instead of changing $1,000 every time, it will be twice as much each time. So we'll go from $1 to 2, $2 to 5, 5 to 10, 10 to 20, 50, 100, 200, 500, 1,000, 2,000, 5,000, 10,000. Well, what do we see here? If you just pull back a little bit, pull back from your monitor, sort of take a longer term view of things, what you basically see is you see linear growth. linear growth on an exponential scale. That's what you see. Bitcoin is a great opportunity for exponential growth, and we are absolutely entering an exponential growth curve. Now, does that mean that if you bought today and then you just hold on to things, you're going to exponentially grow your money? Well, I really do wish it worked that way. It's simply not that simple. The fact of the matter is that Bitcoin is a highly volatile currency, a highly volatile asset. And there's a lot of assets out there that are not highly volatile, that are highly volatile. One of my other favorite websites that I really want you to start using after you get really familiar with making yourself tons of money on Compound Daily is the coin market cap. You see, what a market cap is it measures how much money is in a market. It says that right now, oh my goodness, it says that right now we went from $120 billion. I have $120 billion worth of Bitcoin. If everybody sold their Bitcoin at the current price, that would be worth about $120 billion. That's what the coin market cap is. Ethereum itself is only 30 billion. These are incredibly undervalued markets at the moment. Okay. What's more is that they too are entering exponential growth curves. On some of them, not everyone. Some of them are declining. Some of them you will see have a decline on them. They don't have a long-term growth phase. But this is where the opportunity for diversification comes in. What if you were just to buy, instead of buying Bitcoin and waiting for Bitcoin to experience exponential growth, what if you were to diversify your portfolio across the top 10 coin market cap? Well, even if one of these things wasn't experiencing exponential growth at any given time, or it wasn't on an exponential growth curve at a point at which you were interested in it, what if another one was? What if you had diversified into Ethereum back in the beginning of January of this year? You would have gone from $11 to $300 right here. $11 to $300? Well, that's more than Bitcoin would have made you. If you're looking at Bitcoin and you're going, well, I went from 2,000 to 6,000, sure, you 3x'd your money. If you 3x'd your money on $11, you would have made it to $33. Well, $33 is right here. So in the same time frame that Bitcoin would have made you all kinds of cash, Ethereum would have made you a whole lot more cash. It would have made for a whole lot more purchasing power. Diversification means getting into different opportunities. It means creating all of these opportunities and then waiting for them to become profitable. Because you don't actually become unprofitable until you accept an unprofitable trade. Let's say that you bought Electroneum during the ICO. Well, it hasn't actually made it. I guess it finally did. Finally made it out the door. Okay. At what point do you accept a loss on that? Now? Well, no, only on paper. If you had diversified in this opportunity and you had treated that diversification opportunity as a long shot, then you would have no problem holding on to this and waiting for it to increase in value. Why? Because you're making your money somewhere else. Where are you making your money today? You're making your money in ARK because it went up 22%. Where are you making your money today? You're making your money in Stellar Lumens because it went up 6%. Where are you making your money? You're making your money in your diversification opportunities. Okay? Diversification is critical. Now, There's something that you probably have all heard, and that's two things that are inevitable: death and taxes. On Friday, we're going to talk about taxes, but today we're going to talk about death. Because on a long enough time frame, everything dies. The chance of anything surviving goes to zero. You're going to die. All of these markets are going to die. 100% of them. On a long enough time frame. The question is, where will you be in the market, and where will you make your money and get out of the market before the market dies? Okay. This doesn't just apply to markets. This applies to market vehicles too. So if we think that Bitcoin has a 50-year growth pattern, or a 100-year growth pattern, or a 1,000-year growth pattern, why would you not diversify into this opportunity and then wait as long as you could? There never comes a point at which you have to sell, except for what you actually need to spend. The rest of it can remain diversified and making you money. See, diversification means not just taking every opportunity, but being smart about how you take the opportunities. If you want to trade Bitcoin and you want to trade these opportunities, get into these opportunities, but don't just put them all into one. Put it into a bunch of them, okay? And then, once you get your money up on the exchange and you start making money, get your money off the exchange, because the story of every exchange in history is it's either still alive or it isn't. You had better be planning to diversify your money off of that exchange and into other exchanges, because when that exchange goes away, you're going to lose your money. So you better plan to diversify. Make a plan. Trade the plan. What you do is you say, okay, I'm going to keep a fixed amount on this exchange, and if I lose money, I'm going to wait. But if I make money, I'm going to take it off the exchange and I'm going to put it into something else. Well, what can I diversify into? Yeah, I suppose this is one option. My strong recommendation with these types of options is you treat them as a lottery ticket. You treat them as pizza and beer money. Because for all you know, it's going to get thrown in the trash. Same as any other exchange. Treat your money as if it's going to go away. Because for all you know, it really is. And if that happens, you want to make sure that you're in these other markets too. Not just in these other markets right here, Ether, Litecoin, Bitcoin Cash, OMG, Dash, all of those, but in these other markets too. Bitstamp, Bitfinex, Poloniex, Kraken, Itbit. How much money do you plan to lose when Bitfinex goes away? Plan the trade, trade the plan. How much money do you plan to lose when Litecoin goes into the crapper? Plan the trade, trade the plan. How much money, how much purchasing power do you plan to lose when crypto gets outlawed and the internet becomes illegal? Plan the trade, trade the plan. Diversification means doing it all. You want to trade crypto? Great. Hold some dollars. You want to hold dollars? Great. Invest in precious metals. You want to hold some precious metals? Great. Invest in ICOs for precious metal tokens. You want to hold tokens? Great. Stake them in a wallet. You just put them into your wallet and then they earn you more. They just sit here and earn you more. They just mint more. minted more just from sitting here in my wallet. You want to mint coins in a staking wallet? Be damn sure you back up your wallet. Otherwise, it's going to go away. You want to back up your wallet? Diversify where you've backed up your wallet. Don't just keep it in your house on your hard drive. Because what happens when your hard drive goes away? Or your house goes away? I keep my private wallet in 3 different places. One's with my lawyer in my will, which nobody has access to unless I die. Another place is in a private location in my house, which people can't get access to unless they know what's in my head because they can't get into my safe. And a third location is at someone I trust's house, like my parent. It's in a sealed envelope and they know not to open it. That's diversification. Diversification is what keeps you in the game when the game changes, because the game constantly changes. The game is always going to be changing on you. How did you plan for the game to change to keep you making your money? How did you diversify your opportunities so even when Litecoin takes a crap, Ether goes exponential? Diversification is how you remain smart in the market, even when the market makes you feel dumb. Because it doesn't matter what one opportunity does. It doesn't matter if a couple of opportunities. It doesn't matter if one thing, if one exchange completely ups and takes all your money, because you are diversified, because you planned for that moment to occur. You plan that trade, and you trade that plan. And that is the way of the trader. I very much look forward to our final orientation lesson this Friday. But right now, I really do invite you, number one, to look at what Casey has to teach us about how he works his diversification plan. He's going to come on YouTube next, and he's going to show us what a diversification plan might actually look like. And what I want you to do is I want you to start making your diversification plans. You're not trading, so diversify. Go explore more coins. Find out what staking. Find out what masternodes are. Find out what these opportunities are to make money just by holding on to them. Find out what hashing contracts are popular right now. Find out how to make money through diversification. Plan that trade that plan. And then share with the group your strategy for diversification. You think a coin is cool? You're interested in Diamond? You're interested in BitCloud? Bro, whatever it is that's hot right now, E3 or Ember or whatever it is, I don't care. Let's talk about it. Let's talk about it in the boiler room. Let's talk about what it is that you're interested in diversifying into. What opportunities you can create for yourself to diversify, and what plans you're making to diversify. So I'm going to hand it over to Casey, and thank you very much, and I will see you on Friday for our final orientation lesson